Hello and welcome to this, the Books Crypto Club weekly catch-up on Zoom. It is Sunday, the 6th of February 2022, and we never really know what we're going to talk about in these sessions. Sometimes it's blockchain, crypto, DeFi, NFTs, ICOs, STOs, who really knows? This week, though, we're going to focus a little bit around the blockchain side of things, looking at property and real estate and the markets in that place. We're going to have a conversation with a couple of people who are very much in that space. And we're going to have a general chat. It's worth staying on until the end to see a particular point that someone made where there could be a big shift in the market in the next couple of days. So that's a great reason to staying on board. For those who haven't seen the series before, please do watch the video. Come and join us. We meet every Sunday. The sessions are open to novices and experts alike. Everyone is welcome. For those who are into the YouTube side of things, please do click on the subscribe, click on the like, make comments, join in. So let's see who's going to come and join us today. You as well. Hey, Rob. How's it going?
Good evening. I'm fabulous. How are you?
I'm not so bad, thanks. So you've been watching the crypto markets at all? Been seeing anything happening?
To be fair, this week I've been so busy. I've done nothing, which is a bit of a bugger because I've missed a couple of opportunities. But hey ho, that's the way it is, isn't it? So
okay, yeah.
You know, you don't regret what you didn't do.
Yeah, it's always you got what's it called, buyer's remorse. Something
Yeah.
That's usually when people have remorse because they did buy something, as opposed
Well,
to
that's right. Yeah.
remorse for not buying something.
Yeah. No, I've just been busy doing other things. So.
Well, there's been a fair amount happening in the crypto space this week. You look at what's happened to Bitcoin. It had a sudden leap. And was it a couple of days ago where it went up from 37 and it's now at 41.5 or something. So we shall see.
I mean, you know, with the few funds I've got, I stake them, but I'm just doing it on Binance. Because all I use is Binance, and I see that some of the things that, you know, they're 3, 4, 5% normally, but then others are at 12, but you have to register for them.
Yep.
And normally I'm too late by the time I've seen it. So, or it's in a coin that I don't hold, and I think, well, okay, shall I go and buy some just so I can stake it? So, and sometimes, you know, do I want to buy a coin just so I can stake it? That's not always the right reason for buying a coin. So, so I don't know if there's what other people do, basically, or are there other things besides Binance that I should be using instead?
That's right. Well, too, we've got a couple of the people joined us. So I see we've got Arjun's joined us. Hey, Arjun.
Hi, sorry.
Sorry, Arjun. Hey, Arjun. How are you today?
I'm great. I'm great. I thought I'd just pop in, see how you guys are. I'll put my camera on.
Hey there. That's great. Yeah. I guess you've not been along to one of these sessions before. It's pretty open format, really. We get a variety of people who join us. Some people who are new, some people who've been in this space for a while. There's no fixed topic or agenda. We open it to everybody. So if you've come along today with any questions, then that's brilliant. Just ask away. If you come along with any knowledge, experience, or opinions, again, you know, throw them in. We're all about learning. So thanks for joining us today. And Miss Lee as well. Who's Miss Lee today?
Hello. Hi, everyone. How are you?
Hi again. Were you on last week?
Yes, I was, and I've been there before.
Yeah, back again. Fantastic. That's great. And we've got Mr. Abel as well, who's joined us today from. I keep forgetting what your company's called.
You'll get the hang of it, Gary. Don't worry.
I think you've got so many companies going. I never know which one you represent.
5 last count. Yeah. I'm from the well, mostly I'm these days TPX property exchanges.
So that's another of the great examples of something that's actually using property and blockchain in some way, and it's actually working. And
yes, indeed. We did the MVP in 17.
Yeah, and you're regulated as well, aren't you? With the
Not
FCA?
yet. No, they've told us 3 months for an RIE license, so they're fast tracking us.
Okay. Yep. That's fast track for the FCA, I guess.
Oh, I'll say, yeah. Well, the Bank of England's been kicking their backside because they need an equity release product that has nothing to do with the banks out there.
Okay. Yeah. It's all interesting. I was just introducing for people who've not been along to these sessions before. These are really open in terms of what we end up talking about. So like last week, we had some really good stuff around regulation with FATF. So that's the Financial Action Task Force, and a whole thing of now when you're doing crypto transactions, the obligation to capture who the buyer and the seller is and record it and everything. So I think it's travel conditions or something it's called.
Yeah, as soon as you start to cross those borders, whole new regulations start to apply.
Exactly right. So it's interesting. So Arjun, just coming back to you for a moment, what's your interest in this space again?
I'm actually in the process of setting up a neobank out of Canada. So okay. I've acquired a license. I've run OTC desks for the last 5 years as well. I'm an investor in crypto. I've been a technologist for about 27 years, worked in merchant banking, primarily like UBS and Morgan Stanley and outfits like that. I'm a software engineer by trade. And I'm involved in commodity trading as well.
Okay.
So
it's interesting. Interesting saying that you're setting up a neobank in Canada. That's quite an interesting space, then, I guess.
Yeah. So, yeah, it's a space that essentially I'm involved in lots of high-level regulatory activities, both cross-jurisdictional and within Canada and the US. That I have to plug in SWIFT, SEPA, ACH services across the dynamic global financial markets at the moment, and dealing with the regulatory activities of KYC and CIS and so on and so forth.
Okay.
So I'm deeply involved in that space.
So this is probably the interesting thing for the likes of Rob and Ellie. Hi, Ellie. And Miss Lee and that kind of thing. That we're beginning to see this crossover between kind of like the wild west of crypto, and it's stabilizing. And Anthony was beginning to smile there as well about how it is that we are kind of getting there with regulation. It's just it's kind of a challenge of them striking the right balance.
Yeah.
It's not just that, it's actually finding enough experience on the other side that you can get crap done. We're looking at the FCA team that, Gary, you might have the more up-to-date numbers on this, but literally about a year and a half ago, there were 2 or 3 guys on the whole crypto team there.
Yep.
And now there are apparently 10, talking from some of my sources. And they phone the SEC every day to find out what the SEC is doing so they can work out what they're supposed to do. And then you got the usual problem with those guys getting poached every few months. As soon as they've done their 2 years there or whatever, then they're out. So there's a lot of expertise being passed down the chain in there.
You're right, because they had a great guy on the FCA Innovation Sandbox program.
Yeah.
Who was former, I think it was German regulator or Swiss regulator. Came to the FCA. He joined all that. He then got seconded to BaFin, I think, so the German regulator.
Yeah.
Came back, and now I believe he has joined FinTech. So
yeah, now he curses them from the outside. It's great.
Maybe the useful thing for you, Arjun, is that we probably don't have anyone directly involved in Canadian regulation, but in terms of US, like CFTC, SEC, Treasury, whatever, we probably have amongst all of us here a very useful network of people who know people who know people type thing. But if you ever have any questions or anything, that'd be good. I see
I'm involved in 3 primary aspects of crypto and blockchain activity. One is, as I mentioned prior, the neobank. The second is I'm going to be representing a lot of artists within the NFT space.
Okay.
And the third is I'm building let's say a derivatives product on the crypto market, in the crypto market space. I don't really want to go too deep into that, but it's quite a serious product and requires quite a lot of liquidity behind it.
Yeah. We've got an interesting challenge, certainly in the UK, around derivatives as well. That crypto derivatives in the UK.
Well, it's not really allowed since actually I think it was July 2020.
That's right. Yeah, they banned the sale and promotion of them to retail investors.
Yeah.
So you can do it with commercial organizations, but you can't offer crypto products.
I'll probably focus my activities, because of who I work with, on an institutional level.
Mm-hmm.
Right. So I'll give them a product that allows them to take the market in both directions, and also maintain their position within a digital currency rather than fiat digital.
So what do you mean by digital currency?
I know you.
You know, Ethereum,
Okay.
like that.
Okay, I'm with you.
That's how I refer to it. So.
Okay. Yeah. No, it's always interesting, because I have these conversations at times trying to explain to people that CBDCs, so central bank digital currencies, are not cryptocurrencies. And then I sometimes have the challenge of explaining to people that cryptocurrencies are digital currencies, but digital currencies aren't necessarily cryptocurrencies. So I like to try and draw up that delineation when we're having a kind of conversation, because it gets a bit confusing, particularly when you look at regulation. So the FCA, and I think it's similar to Swiss FINRA definitions around crypto assets, and a whole differentiation between effectively crypto money, crypto tokens, and crypto assets, kind of thing. Yeah, Anthony, you've probably been through this rabbit hole.
We had to go and get our Howey test stuff done. So legal opinion on that one. Just for definition, guys, a little bit here. We stayed out of being effectively. We defined ourselves as title certificates for property, and because they're recognized as legal title certificates, they're very small unit sizes, but in all other respects, they're legal title.
How do you
property is not a regulated activity. That's the key thing.
Yeah.
So we're property guys rather than securities.
Yeah, Anthony, how do you manage the on-ramp, off-ramp activities?
Carefully. Yeah, carefully. Yeah. We actually have access uniquely to government database, which allows us to compare any records produced directly against the records that the government holds. And if you can't pass that test, the document doesn't pass. So it's quite specific, and it's unique to us, because we're dealing with property. The agency and agencies that we work with have direct access to government database. It's kind of interesting, actually, a little bit on this, because they use zero knowledge proofs. So there's no direct transfer of data, and it's a big stumbling block that's been with all the government databases, because quite honestly, they don't spend enough money to keep them secure, and they're terrified that they're going to get the world's biggest hack onto the government databases, so that they keep it absolutely clean, so to speak. So all we do is you compare the structure of the data that we have against the structure of the data that they hold, and then they give us a yay or nay. That's it.
So do you see sorry guys, I just thought.
Go.
Okay. So do you see an opportunity for an oracle position within the data activities on the property side?
Interesting question. We've looked at this a few times to see whether that could happen. I mean, the key thing that we do is we manage the data within our own systems. And so therefore, we look for people to interface with us rather than give our data to others to interface with third parties with. So if you see what I mean, so we drive the interactions directly to the databases, and that allows us to monitor transactions, do the surveillance that we need to do.
But doesn't that puts a certain level of risk on your side?
It does. I mean, the key thing for us is we are obligated under the licenses that we're seeking with the regulators around the world to manage the data that we hold, which is always nerve-wracking, to say the least. And then also to make sure that we run the market surveillance according to their requirements. So we have to make sure that we know right down to the millisecond exactly who owns which asset on all of our exchanges worldwide at all times. And that's quite a hard requirement.
Arjun, I was going to quickly ask, were you talking about an oracle? Do you mean in terms of like a land registry,
No.
official data store?
When I speak of oracle, I talk about a data validation position within the blockchain.
Yeah.
Maybe
this may help you, Arjan, a little bit. When we built our chains, we're DeFi model. So our chains are adjudicated in each jurisdiction in which we operate. Our objective is to set up 20 exchanges over the next 18 months. And each of those chains can be adjudicated within their local jurisdiction. We needed to build an institutional grade product. We had to make sure they could be adjudicated in wherever those properties, don't forget we're talking about real estate.
How do you deal with data which isn't up to date or landline?
We onboard all the properties onto our exchanges. So we are actually the contracting party with third-party search and survey, for example.
Is that a scalable solution?
It has to be. The key thing, we create a Genesis record for each property as it enters the exchange. We own that data through our own registries that then work in parallel with the land registries. Now, our registries are nonprofit, and we share that data directly with the land registries in each jurisdiction in which we operate. We ostensibly have better, more secure data than they have on these properties because we do media-rich content where they don't.
Is that a non-profit activity because it allows you to get a more seamless entry point into the government organizations?
To a degree, you're right. Yeah, we had to create that at arm's length between the operations of the TPX itself and the data that we hold on these properties, because we couldn't be seen. The Genesis records that we create is just that. It's a statement of the data. Now, that's not their trading data. That belongs to our exchanges. But it is the list of all of the attributes of the property, which we follow the Rick's Red Book on. It's a structured data template.
I'll stop talking now.
No. You can get me deep on that subject. We'll bore everyone else here to tears before you know it.
Well, we've got the facility on Zoom to have breakout rooms. Maybe I should send you to go and have a chat.
Let us go into a room and play with ourselves. That sounds terribly antisocial.
but in fairness, what it shows straight away there for those who aren't into this space is the fact that there is so much going on. The whole thing about property, real estate. I kind of joke, since the ICO craze of 2017, 2018, I've seen about 60 property-related blockchain projects come and go. And TPX is one of the few that survived. I think Proppy is the other one in Canada. So there are a few, but there are.
Can I give you the secret sauce?
Go on, yes.
Can I give you the secret sauce? Yeah. Most of the guys who have done this in this space, they focused on tokenizing a property and took a technology or real estate approach to the markets. And so they said, Yahoo, I've got a property here. Look, you can all buy it now. It doesn't resolve the fundamental issue of every investor. I've got into the damn investment. Now, how the hell do I get out? Mm-hmm. There's no secondary markers. There's no liquidity. There's no exit.
That's why I mentioned the on-ramp, off-ramp.
Yeah, so to just take our approach, we did it from a markets OTC approach, looking at the asset class. We took it from the other end of the telescope, sort of thing, and we said, well, what is it that an investor wants out of the asset class? And fundamentally, where you drive this to almost instantly, I think Arjan's going to love this one in a second, is that we drove it to liquidity in the asset class. That's what the investor wants most. They want transparency, trust, governance, adjudication, institutional grade, regulation. Yes, it's painful, but we'll do it. And the end result is they want to buy an asset that they can trust. And I frequently told people two things. One, tokenization of a property does not a market make. You have to start with a markets approach and make the asset liquid, and then allow anybody with a mobile phone in the world to buy into it. That's what we've done. If you do, the other aspect of this is not only that, is this other thing for anybody looking at this. I don't give advice here because they'll shoot me if I do. But if you're doing any of this NFT stuff, just because someone tells you it's on a blockchain doesn't mean it's trusted, guys.
Yeah.
You know, it's interesting you say that, right, Anthony? Because I'm talking to one of my guys, one of my associates, don't want to go too deep into it, but we're going to be launching a authentication layer product.
Yeah.
For NFTs.
Good. I'm glad someone's doing it.
You know, it's required. It's seriously required because the ability. I'm in the NFT space. The ability to operate fraudulently in the NFT space, it's very simple.
Yeah, very easy. And I've got a lovely. If you ever check out our website, tpx-london.io.
TPX, is that your website?
I'll put it in the chat in a second. But if you look at our website, we've got a lovely article on invisible statues, NFTs. This is a great story. I kind of love this. It's a bit of a kicker. Is that people in Italy, you know, finance, police, taxes, everything else of that Italy, they always find a way. It's a well-known sculptor created an invisible statue. Okay, great, fantastic. And because of the machinations of the NFT world, he created a price for his statue. I'm not going to ask him who paid for that price for it. It probably was one of his good mates. Anyway, they created a price.
Some bold ape out there.
Yeah, they created a price for the statue, and hey, no great surprise. Guess what? He lost it. He lost his invisible statue. No, the real kicker on this one is he got an insurance claim through to pay for his lost statue on the basis of the price that he created on the NFT. Now, if that isn't the Wild West, I don't know what is.
Wow.
But from an industry point of view, as I said, an NFT doesn't mean it's trusted. It just means that someone's created a blockchain for something.
That's the king's clothes, that is.
Oh, it is a classic, absolute classic model. I think it's a hilarious story. But it does show you that people are out there experimenting with this stuff. They're trying stuff on.
Listen, I tell
buyer
you,
beware.
an authentication model is required for the rational behavior within the environment.
No, I keep telling people that's where government actually comes in, guys. You know, we all curse them at best times, especially their taxes. But when it comes to trusted onboard, offboard ramps and transparency and trust systems, government has a role to play here. And the more senior your asset, particularly when you break out of the NFT trader mentality, high volatility, yeah, let's go make some money. Okay, we've all made some money. It's good. It's great. You know, nothing wrong with that. But there comes a point where you transition from what we call extrinsic value asset, BTC, which has no real asset value in it, to an intrinsic value asset, folks. And that's a much bigger market. We currently identified 365 trillion worth of real estate property in the world that all of it could ultimately, give us 50 years, guys, it might take a little while, converted to trusted NFTs. All right, where the government has a role to play. That's really important for our economies right now, because from our modeling, property, real estate as such, is inflation-resistant asset.
I think,
and that's where we need to be right now.
This is going to sound a bit, I don't know how this is going to sound, but I think government oversight is overstated. What we need is a technical system which is built in a extremely rational algorithmic manner without.
So this is where we get in the code we trust.
It ain't gonna work.
Tried, tested. Unfortunately, it works for the guys who are in the space. Code always has a few holes. There's always problems. There's always someone who finds a hack. As I said, even with the government database, it's very hard to get third party. There's always this aspect that comes into all of this. And this is the fun thing, which I have with a lot of people, is it's very hard human behavior is something that repeats itself. It's cyclical. The hacks that people do, the way that they front run, the way that they play the data, everything else like that, tell you the truth, it's been done hundreds of times over the last 200 years. All right, human dynamic, human behavior is very consistent. They try these things. Smart guys work it out. And you know what? They try more or less the same sort of thing with different tools each time. All right, we have a lot of history. Our traded, our equity markets shows us what front running looks like, shows us how market manipulation works. Now that's fine. The traders go off and make some money. But when the real world starts to interface with our world of NFTs and this sort of stuff, which is increasingly happening, all right, is if they get burnt, then everybody gets burnt. So it's not in the industry's interest to do anything other than the systems and processes which people can identify, which work, which gives them trust in the assets that we're trading or creating.
The problem is that a lot of systems at the moment, especially within the DeFi space, everyone's trying to scale really fast.
Yeah.
And technology is inherently extremely versatile in its ability to scale as long as it's interpretable.
Yep.
It's the inherent nature of developers. You know, I used to code quite a lot, and I run a software development house in India myself as well, still, but for my own projects. We always put backdoors into things.
Well, coders always think they're invincible as well.
And yeah, coders are also extremely nefarious in their activity, and they're really terrible at providing oversight within code, right? They do it on purpose, and a lot of people that are involved in this space don't really understand that.
That's
And
true.
what I mean by that is, like, so for instance, if you're building in an agile philosophy, everything's about speed, right? Speed, because time costs money. But correct coding practice is extremely important to fix things and to understand procedural operations and modular operations and object operations in a very clear, distinct manner. Now, lots of these things are built by singular teams. So there's one group of developers sitting in one building, building this stuff. And you're open to abuse, which is why, for instance, companies like Microsoft, they build in this object-oriented fashion that's historic, actually. It's been, I mean, it comes from the times of SSADM, which is when I started learning coding, right? And I'm talking now 90s, right? So they have separation and a distinction across the board. They have the best coders in the world, who just happen to be, for instance, Indians for normal programming, but the best engineers in the world who happen to be generally Americans. And, you know, they break everything apart and get all the coders to put in rational comments across all lines of code.
Well, this is the open source. Go open source, permissionless, and off we go.
And now we're getting into a totally different energy cycle. It's like,
is it not? Because as Anthony says, we kind of go through iterations on this. There's nothing new with any of this, folks. For anyone who's new to the crypto space, the rules of crypto and blockchain are exactly the same as any other development cycle. You know, coding, testing, designing, developing, good practice, that kind of. I'd probably argue about the Americans being the best engineers, because I suspect there are.
That's okay. I'm Canadian. I won't take offense.
No, I was more in terms of thinking some of the best engineers I've seen are more from Eastern Europe and further east.
that's because I'm not talking about crypto.
No, I'm not either. And the reason I'm not talking about crypto is because it doesn't matter. Crypto is actually no different. Crypto is written in software. That's a conversation for another day. I just want to quickly introduce, I saw we got a couple more faces come on there. So I want to say hi to Ellen. Hey, Ellen. So she's looking and she's smiling, saying, please don't point at me, don't get involved. And we've got Peter as well. Peter's fantastic in his background knowledge of what's going on in the crypto markets, because he takes a look at more behind the scenes, some interesting data. I don't know, Peter, are you seeing anything interesting happening in the market this week?
I mean, overall, the supply side is quite positive in that the like the the strong hands are busy chomping through supply, liquid supply, so liquid supply is going down, and there's still healthy growth of number of wallets, across all sizes more or less. For now, we still seem to be in a a bearish macro situation. How long it's going to last, it's hard to say. At some point, there's going to be a depletion of supply, and then price will carry on going up again. Whether we've reached a bottom yet, it's hard to say. But we've broken out from the diagonal downward channel, which is a good thing. However, we've still got to pass a few key horizontal resistances, most notably, well, I think 42k is the close one, and then 147k is also a key barrier as well.
So I'm always nervous about talking about crypto prices and that, because I go onto different groups where they talk about, oh, crypto's going up, down, blah, blah, blah. But I do think it is really important that the thing that you mentioned there as a general principle, if you squeeze supply, but there's still the demand, the old-fashioned economics 101 says that when demand outstrips supply, prices go up, apart from elasticity, and it's going to. So I guess that ties in nicely with it, as you're saying, where Bitcoin, for example, has gone up from, I think it's 35k a few days ago. It had a sudden leap a couple of days ago, and it is, as you say, it's heading towards 42. So that's kind of interesting.
Yeah.
So
I mean, that was partly a lot of shorts. There was everyone's assuming the market was going down, so everyone's starting to pile in the shorts, and they seem to have been squeezed. Which when you get large quick jumps like that, it's normally the futures market causing that. With squeezes on the long or short sides. So the price is day to day being driven more by the spot market than the futures market. But so, I mean, the last month or so, futures have definitely weighed down on the prices, because so many people. Well, originally, so many longs were having to be closed all the time, and more recently, the short guys have been squeezed.
So it's almost as though, as we were saying before, in many ways, that the crypto market is replicating traditional financial services in terms of products and regulation and that, but also the market behavior, because a lot of traditional markets are driven by, as you say, futures, shorts, longs, derivatives, that kind of thing. And crypto seems to be heading the same way. That it's less and less about the day-to-day trading activity and more to do with things like the futures market that are influencing things.
Gary, I would say that one of the things, I mean, my understanding is that 43.5 is really the number that they're looking to break for resistance, right? To really go into that bull market. Otherwise, it's a lot of sideways movement. But one of the key differences from my perspective is the fact that the way the large institutions are buying blocks of Bitcoin, big blocks. I know this because I'm connected to outfits like Kraken and FTX that are dealing with this stuff all the time. And they're just taking it out of the system. And with traditional banking aspects, with traditional finance, you don't really take it out of the system. When you get into the higher realms of finance, for instance, let's say you've got 100 million, 200 million, $1 billion, you can place it into instruments. You can put it into MTN programs. You could put it, you just create a debt cycle. You're making 1.5% a day off it. But in the crypto market, they're taking it out of the system. And I don't see them doing that in the traditional market. There's no real mechanism of doing that apart from if you're buying houses, I guess.
So
in
Peter, I was going to offer, because I know Peter tracks things like wallets and that. So I guess, are you looking at the institution, what look like are likely to be institutional wallets? Are you seeing them buying up crypto and not releasing it?
Yeah, I mean, it's hard to say kind of whether the institutions or not. Kind of institutions are definitely buying. It's definitely kind of in the US. We're kind of just at what's it called, Miami Hedge Fund Week, and there's a lot of interest there. This is kind of very traditional kind of hedge fund guys. There's a lot of interest there. But yeah, kind of now the kind of, for example, the Bitcoin blockchain, like 75% of transactions are 1 million plus, and about 50% are kind of 10 million plus. So these are hefty chunks moving around.
Yeah.
So that's, yeah, more institutional size. And yeah, I mean, again, since kind of 2020, well, this is very much, I mean, since 2020, like the type of investment in crypto has been a lot more sophisticated, a lot more like your traditional kind of professional investors with large chunks of money as well. Since May 2021, the guys with deep pockets have very much taken over the blockchain.
Yeah. So interesting. Just going back at the subject for a moment. Ellie's just asked about Anthony, about what the assessment in Canada, which confuses me, because Ellie, I thought you were in Arizona. Oh, she's staying on silent.
I haven't heard you yet.
Yeah.
Just got to do the unmute. Ellie, we can't hear you yet. You have to unmute.
Trying.
Hey,
Okay,
there we
got
go.
it.
You're good now.
Yeah,
I am in Arizona, but I have a multinational family. And
Wow.
one of my nephews lives in Ontario, Canada.
I know it well.
And he wants to buy real estate at some point, and I think this would be great. Now, to contribute a little more about properties, I am originally from Colombia in South America. And I just learned that the first property was sold using Bitcoin in Colombia. So I don't know if you guys knew about that, but I thought that was like, wow, if this is happening here. Are you expanding internationally?
Yes, we are.
Anthony?
No, yeah, we have 20 exchanges planned for the next 18 months.
Wow.
So some of those are in Canada.
Okay.
Is the short answer.
Yeah.
So
But
in
it's a license model for us. Our London is our first one, and then we launch one every 6 weeks or so thereafter. And we've
So
got
in
launch
order
teams in US and American cities.
to keep up with that, where do we keep looking?
Aha! Well, you get on the website. Very shortly, you'll be able to download the app, and that allows everybody to get onto the local exchange, subject to their being able to pass AML KYC with that regulator on that exchange. Then you can have a client account on any exchange that we set up.
I'm sorry, you spoke real
fast.
big gibberish to me. In order to pass what?
People say that about me all the time. What can I say?
I'll offer the translation. He said, go check out the website.
Go check out the website. It's on the website. No, Ellie, you're welcome. That's what this is all about, asking questions.
Anthony, which jurisdictions in Canada are you in? Which provinces?
We haven't named them yet. 2 provinces in Canada, and then we're on either coast of the USA. 2 cities on one coast and 1 on the other, and we've got targets for Southeast Asia with a couple of well-known sites there, and then finally Australia, which we're in the process of, but we haven't announced a launch team for them yet. So in this case, we've got 3 launch teams already operating, who are destined to receive our licenses, and then they open up their exchange. Each exchange is designed to be owned locally. So we're very much of a global exchange, owned and run locally.
I'm opening up a bank in Canada. Maybe we can do something.
Well, I've had lots of fun talking to the Bank of Canada recently. That was kind of fun. Digital assets and where the world is going to. And I think I probably gave them indigestion, but they need new monetary policy tools. So they're kind of interested.
Yeah, they're very slow.
So it sounds like you two should catch up offline, and I should get some sort of and I should get some sort of introducer's fee in between.
Yeah, if we keep this up, I tell you what, we keep this up, Arjan. I tell you what, Gary's going to lock us up in a room together. We keep talking like this.
No,
quick question. Are you launching any exchanges in jurisdictions where there aren't centralized land registries?
Yeah, good question. The issue is, without sounding too biased, and I know I've got my, where we're TV flag thing here, but it's English common law is where we're focused initially. So, give us enough time. We hope to get everywhere. But there are issues where you don't have a land registry. It's very hard, you're right, to create a tradable title out of something that has a certain amount of impermanence in the land registry. So, for example, Greece is a bit of a problem for us. India, although they have a good system, but it takes about 25 years to adjudicate on a dispute with land.
Don't do it.
Yeah, exactly. There you go, Aja. Exactly. The Italians actually invented a lot of this stuff. They're really interesting. But again, it's about 18 years to settle a land dispute there. So it plays differently in different countries.
What about Turkey?
Pass. I couldn't give you a considered view on Turkey because we haven't looked at Turkey strong enough yet.
I live in Turkey.
Okay.
And I live in Croatia.
Okay.
And I'm from London.
Ah, well, there you go. Okay. That mixes it up a little bit. So we look at it on a case by case. Typically, what we have now is our regulators introducing us to other regulators because we're part of the Sandbox Innovation Program. And that's worked out rather well. Our central bank, Bank of England, also is quite enthusiastic about us as a UK export. So with the Department of International Trade. So we've got a certain amount of kudos and credibility. A lot of this will be announced.
Maybe you should look at the offshore jurisdictions that are controlled by the British.
That is one place, but the key thing for us, we need adjudication on the chain for our properties in case there's a property dispute, because let's all face it, you have property disputes. So we need to make sure that each of our chains and our exchanges, are co-located. They're all interoperable, but we had to have adjudication on the chain to create an institutional grade product.
Okay, all right.
Quick question for adjudication on the chain. Do you mean disputes being what's called solved off chain, or is there something directly on chain which can solve it?
Both. I mean, if there's an adjudication, if the courts in a particular jurisdiction say that in a property dispute situation, someone didn't own the property and they represented that they did, and they put it on the chain, then we have to have a basis of adjudication so that they can be adjusted on the chain or changed on the chain, which we've managed to do because of the way that we have enabled the mining process in each of the chains in each of our jurisdictions. So it's very important for us that we created an institutional grade product that if we have a court order, we can resolve a property dispute with a given asset on the chain. But the key thing for us was to get the DeFi model working and to get the Uniswaps and other aspects to do it, because fundamentally what we're seeking to do is to make property a fully liquid tradable asset class. So we had to make sure the chains were fast enough, and we had to make sure the chains were not centrally managed like an Ethereum chain. And therein lies the challenges with Ethereum. So from our point of view is to make sure that the chains that we created were fast enough, sub 50 millisecond for end-to-end transfer, and the gas chargers were high enough that people wouldn't squeal. So we're low enough to say they wouldn't squeal. So it's under 5 bits on the gas charge. So
how have you managed that technology-wise, Anthony? Do you have your own chain?
Yeah, we had to create, I mean, it's a BTC fork, to be fair. So we created that. And then quite honestly, we borrowed the protocols from some of the other chains. But the key model is get away from centrally managed systems, because then you can create the fast chains, and you can also make sure they're institutional grade by having adjudication on them. And so although title is always secure, if there is a dispute in property, which generally, by the way, in the way that we designed all of this, doesn't affect anything on our chains at all, because there's still for the occupier or manager of the property, there's still a requirement on our chains is that they have to have a very stable 51% of each of these assets. But the beautiful thing about this is when you look and understand how the world is operating, the title certificates that we create are more valuable to the financial systems in which we operate than they are to the occupier or manager of that property. And so our objective is, and the good takeaway for everybody here, which will be fun, is that we created our exchange so somebody with a property on our exchange in Singapore could use it in real time to buy a cup of coffee in London with a inflation resistant appreciating asset without touching the banks in between. And that's what we've done.
Pretty powerful. That's
Yeah.
a great sales pitch on that as well. So I just noticed we've just been joined by Dinesh. I want to say hello to a couple of new faces. So Dinesh, hello, welcome aboard.
Hi, Gary. Yeah, thanks. I was just joining in to see what is the agenda and
Yeah,
how things are. That's all.
No.
Yeah, thank you.
No, not a problem. We don't have an agenda as such. We've been talking about all sorts of things. The focus today has been very much around property and tokenization, but not necessarily tokenization of property, but more in terms of creating a marketplace. Is that working instead?
Now we can hear you.
Yeah.
Yeah, you're back.
That's weird. My microphone and headphones just went off. So yeah. So it's just a mixture. We're talking about all sorts, very much about property markets in a way, as opposed to necessarily property. So Anthony runs TPX, who are a leader in this space. We're doing some great stuff on there. Arjun was talking before. He's involved in a number of projects, and we're looking at the potential overlap on that kind of thing. Just been joined by JT as well. JT with his unicorn logo is always doing interesting stuff in the crypto and blockchain space. So it's really open. What I was going to suggest for the last 10 minutes though, is if anyone's come along today with any particular questions that they'd like to ask, now's the time to ask away. Because I recognize people come on for an hour and you might think, oh, I really want to ask something. And then someone else is chatting away, you don't get a chance. Ellie, go for it.
Okay, if I'm new to this crypto world, that I want to invest $10,000, so where would you put it?
I'll just send you my bank details. Yeah.
I'm sure it's gonna get a lot of great numbers and letters.
Yeah.
And
Okay. So I'll always start by saying I do not offer financial, legal, taxation, or investment advice. So that's the kind of thing. So I kind of shy away from that kind of thing, to be honest. But certainly where I have conversations with people, it is about, looking at some of the more predictable cryptocurrencies that seems to be doing quite well. So the big players, the Bitcoins, Ethereums, these ones.
Okay, so would you put it in Bitcoin? Would you put it in Ethereum or any of those new little coins that are obscure?
I would. So again, it comes down to not offering financial advice or recommendations.
No, I understand that.
I'd invest a fair amount in alcohol just so I can have a nice glass of wine. But I think it's a matter of having a mixture of things realistically. And it depends upon your risk appetite. So if you've got some money that you can literally afford to throw away, then in some respects, this whole crazy idea of doing what they call spray and pray, which is just put a little bit into lots and lots of things, all the altcoins, don't do any research, don't worry about any of that, and in the hope that just a couple of them, or 100x or 1000x, actually works sometimes.
Okay.
So it really depends upon what your risk appetite is, how much time you have available to research things, and what access to information you have as well. Because you could do things, people will argue about, go through a project's white paper, look at the team, look at its credibility, its history. Actually, great teams with great ideas still fail. And sometimes dreadful teams with dreadful ideas somehow crazily succeed and then fail. So that there's no kind of telling in this kind of thing. It really is open to everybody. And it's funny, I was watching the expression on a few people's faces as I was saying on that. There's a few nodding heads there, so hopefully I'm not that far out. I don't know, anyone offer any contrary advice to that?
I'm sorry.
Go on, Rob.
sorry, I'll throw something in for you, Ellie. I'm fairly new. I'm sort of only 6 months into crypto, but what I would say is, if you've got the money sat there, don't let it burn a hole in your pocket. Don't be too hasty to do something with it in the fear of missing out. It is okay just to sit there for a few months and get your head round things.
Yes,
Without just jumping in and not without any good reason.
It's same. I just take it slow, and take it as a learning curve. So and the number one rule, we're all very restricted on what we can say here, but the number one rule is assume that you're going to lose everything, because that's a good way to start. Do it a little bit and learn. Try some things. You're going to lose some money. You're going to gain some money. It's going to be exciting. It's going to treat it as it can be a lot of fun. But just take it slow, and don't get too excited. And the classic sort of thing. Don't follow the wins or don't follow the losses. Just take it slow, learn from it, and read as much as you can. And then as you go along, you'll get better and better and better.
Yeah, something I offered. I did a crypto Instagram live on Friday, and a couple of things I offered as well, which I'll share here, is if you see an opportunity that looks too good to be real, it's too good to be real. So don't go for it. Anything where you will get deals where people are talking about guaranteed income. As soon as I see the word guaranteed income, that's a red flag. As soon as they talk about guaranteed hundreds of % gains, another red flag. As soon as they say no need to worry about this, we look after it for you, another red flag. If they say things like, we actually look after the custody for you, so you don't need to worry about it, another red flag. So build up your list of red flags and then trade them off against what the opportunity is.
I'll pick up on something that you said, Gary. Also that Gary mentioned something about risk appetite, and in the end, it comes very much down to that. And again, I say the same as Gary. This is not advice of any kind. So if you have $1,000, you have to look really at to be safe. If you don't, not really for big risk appetite, because there's a lot of bad stuff out there. Look at the top 20, top 30 cryptocurrencies, and see which ones have dropped the most. So you would have spotted last week that Solana came down to about $80-something. That was the previous all-time high. Was about 260, if I'm not mistaken, 60 something. So that means that if he went again to the previous all-time high, you would have, if you had bought at $80, you would have made 3x on it. So this is the type of thing that you need to start to look at this top 30. If your risk appetite is not that much, then look at this when there is big drops. See how much it dropped, and if it is a good crypto, well, good, it is debatable, but a well-known top blockchain, then potentially you will make some good returns. But again, nothing is guaranteed.
Ellie,
Thank you. That's good advice.
What I would say is,
not, sorry, Harry, it's not advice. Okay, please don't say that.
Well, it's good suggestion. Sorry.
My thoughts are, go through the technology, learn about it, what it does, the store of value, the utility, how it works, and why it's going to be beneficial, not now, not tomorrow, but for the extended future. And there's a lot of technical words and systems to learn about. And I would say, research. Study, research before you put your money into anything, and understand why its value has grown or why its value will grow, and what's going to separate you from being dust in 10 years or 5 years. Is the sector growing? Is it part of the future set, as regards to what the institutions are talking about as well. There's lots of reports from Goldman Sachs and so on and so forth out there, big institutions as regards to what's going on in the market. Do some research,
Okay.
understand the technology and where we're going and why we're going there, you know? And also it gives you the ability to observe the bubbles, you know?
I'll close off with probably two more pieces of advice, which is you haven't lost anything until you sell it. So be very, very careful. I've seen it with people who've put some money in and then it's gone down in price and they've panicked, so they've sold it. And then it goes up in price and they buy into it, and then it goes down in price and they sell it. And so that they've practically bankrupted themselves on that basis. So be very careful on that. And the other thing is, do not take any advice about investment recommendations from any social media channels.
No.
Because I see that all the time. You know, so, well, it's the thing. So, you know, I see it a lot on WhatsApp groups, Telegram groups, Facebook groups, with people saying, oh, what does everyone think about? Which usually means I've bought it and I'm not sure, and I need some, I've got buyer's remorse or buyer's regret now. And so you get people say, oh yeah, you know, buy into this, it's going to go to the moon, blah, 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 which what they actually mean is that they've bought it and are looking to pump the price up. So be wary.
I just want to very quickly, because I know you're about to close this, just to share with you guys something, again, not an advice, but keep an eye in the next 48 hours, okay? Because the whole thing might just crumble totally down. So if not, then we're gonna sideways for a while. Yeah, just keep an eye. That's all I'm saying.
So there you go. JT is our prophecy of doom and gloom. So we'll see what happens with that. So we'll hold you to that, JT, and we'll see what happens in the next 48 hours.
Please don't.
JT, is that based, sorry, just a quick question, JT, is it based on some technical analysis or something that you made this comment about 48 hours and sideways movement thereafter?
Based on history and what has happened last time we went down. But, you know, RSI, we start to look at all of that stuff.
Yeah, that's what I thought, yeah.
You know, it was, you know, it was above 30, yeah, so that's why we went up. But in the past, the previous time that we went down to 28.8K, it happened exactly the same thing. The RSI was quite low, you know, it went up very quickly, and then it came down a second time, really down to 28.8K. So it's kind of based on that and a few other things, you know, that you know, politics, regulation, things that might come out in the next 48 hours, you know.
Folks,
Thank you.
I'm going to have to close this off now because we're pretty much out of time. I would add the additional caveat, which the UK FSA, as it used to be known as, the Financial Services Authority, now the Financial Conduct Authority, that used to insist that any financial product had at the bottom of it, please note that past performance is no indication of future behavior. It could well be the same with the crypto space. So JC may have it spot on. You're right, stuff goes through cycles, doesn't mean it'll happen this time. Let us see in the next couple of days. And if he's right, he's going to be my special guest next week on this series. So I'm going to close off now and say
thank you.
Thank you.
Thank you for any thoughts. Bye.
Bye.
Be safe and see you all again.
Bye-bye.
Bye.